Let's preview next week's events. Next week, the first full week of December. Monday, we'll have a reaction to the Italian referendum. We talked about that earlier. Again, if there's a yes vote, it's good for the euro, and this is totally not priced in and not expected. Mainstream expectations are for a no vote. We have services PMIs on Monday in the UK. It's the most important sector there. Should have an impact. It stands on its own this time. It's not on a super Thursday with the court decision and the Bank of England's decision like it was last time. The ISM non-manufacturing PMI in the US usually a hint for the NFP, but this time it's released afterwards. Still important. It's also in the US. It's the biggest sector. On Tuesday, you have rate decision in Australia. No changes expected there, but I believe that the new governor, Philip Lowe, will try to talk down the currency. We have the for those trading the Kiwi, we have the milk auction also on Tuesday. And Wednesday, busy day. We have Australian GDP. There's only one release in Australia, and the first and final one. We have rate decision in Canada. A lot depends on what happens with oil prices and what happens with the Canadian jobs report, which is due on Friday, this Friday. And let's see, the tone of Stephen Poloz and the Bank of Canada has been relatively dovish. Let's see if this continues. Oil inventories, as always, this time without the shadow of OPEC. Final GDP in Japan, there are usually, this usually sees the revisions, so could impact the yen. ECB decision, that's the main dish next week. The big question is here, we'll talk about it also next week more in detail, but the big question is, will the ECB extend its QE program as is in March when the program is expected to end, or will it taper it down, cut it back down, reduce it from 80, let's say, to 70, and make a plan to end it at some point? My tendency is for an extension for a few reasons. First of all, inflation is still weak in the Eurozone. Eurozone economies still need more support. And secondly, thanks to this Trump rally, we had a sell-off in global bonds. The sell-off in global bonds means that more bonds are eligible for buying for the ECB. More bonds now have higher yields. The ECB has a minimum of minus 40 basis points. It's negative deposit rate. Many German bonds had yields below this level, making them ineligible for the ECB. And now the ECB has less scarcity, more room for buying more bonds. We'll talk about that more in detail. We'll have inflation figures. We'll have everything, more data to talk about. And then Friday, we have UK trade balance becoming more important as it's becoming more acute for the UK economy, and consumer sentiment in the US. The preliminary release for December by the University of Michigan coming very early. So that should be also a market mover, especially as it relates to the month of November, Black Friday, things like that. Okay, so the ECB is the main decision. Also the Italian referendum. Mario and Matteo are the stars, but also watch out for rate decisions in Australia and Canada and quite a few other events.